Hi, this is Adam Anderson with WealthGuard Advisors.
Hello, I'm Blake.
Hey, this video is for education. We may or may not be buying stocks or investments discussed. Please read the disclosures before making any investment decisions. Got it? Hey, Blake, what are we talking about today? Big picture, right?
Yeah, I just wanted to start by taking a look at the big picture of the market. We have seen a pretty strong market over the last 6 months. The first quarter with tariffs were down, but since then it's been pretty strong. And so we're looking at, hey, is this topped out yet? So I thought I'd take a look at comparing the 1 year to the 2 year and run a regression analysis on that. So you can see here, this is the 2 year of the S&P 500. You see this light red is the regression channel for the last 1 year, trailing 12 months, where this blue channel is for the last 24 months. And you notice that on the 1 year, it is looking pretty topped out
Right, so at the top of that channel.
at the top of the channel. And this is a technical indicator that we're due for some sort of correction on the market if the trend of the last 12 months hold. But if you go out further to the 2 year, we'll see that we're close to the middle of the bound there, and there's plenty of room for this market still to grow. I'm of a mind that we should be cautious, especially in the month of September, that we are close to the top of this 1 year trend, and it might be good to de-risk a little bit and wait and see for further clarity. I know the Federal Reserve is coming out with their new interest rates next week. So it might just be a good time to wait and see for a little more clarity before making any large speculative investment decisions.
Right, so the market has gone up quite a bit on expectations that the Fed is going to cut interest rates, and that's next Wednesday. So if it cuts 25 and is cautious about their forecasts with cutting more, probably the market will sell off. If they cut 0.5% and they talk about cutting more, then my guess is that the market will like that. Well, you never know what the market's going to do, but generally, that looks like what maybe the market's on hold for, because it seems like we're still, bouncing around at this level, and it's holding it. It's holding the level so far. So that could be the catalyst for some kind of change. So we wanted to break into some of the individual holdings. And one of the things that we're looking at today, also, I wanted to back up on the S&P 500 issue because we look at, and one of the things that we're looking at today, also, I wanted to back up on the S&P 500 issue because we look at Investors Business Daily's distribution days as an indicator, and we're counting a six on the six distribution days on the Nasdaq and the S&P 500, which is that they're like caution. We're really close to maybe a sell-off. So something to think about, but they're still saying fully invested. Basically, we're staying fully invested, except for we are raising some cash. I mean, when I say fully invested, the majority of the money is invested, but we are raising some cash, taking some precautionary efforts, making sure we're rebalanced, etc. So we want to talk about a couple individual companies that we looked at, and one is Amazon. Today, it's Investors Business Daily is showing it as a breakout. You want to talk about that, or you want me to pull it up, Blake?
Yeah, while you pull that up, Amazon obviously has been performing very strongly for a long time. But one of the things I think is driving it currently is we're seeing a lot of pullback in regulation, especially antitrust regulation. We saw regulators were a lot softer on Google than originally people had been expecting. And so that's promising for a company like Amazon, who obviously holds a huge market share in online marketing,
Antitrust issue
online
problems
distribution.
potentially.
So that's a good sign that Amazon could continue growing without worrying about that regulatory overhang.
I do like Amazon because it's not only a consumer retail exposure, and coming into the holidays, obviously that's a good time for retail exposure, but it's also a tech exposure. And so it's got, AWS, web services, et cetera, that we have, that it has. And so that's a big driver of the revenue. So I do also like Amazon for a large company that is pretty stable for the most part. Yes, it has ups and downs, but My wife hasn't stopped shopping at Amazon, and I don't think she's going to anytime soon. So it's a good one. Another thing we talked about a while back ago is the nuclear power industry. And President Trump back in May passed an executive order that would speed up the approval of reactors and really loosen up the regulations around nuclear energy. So those really took off during that period of time. And that's something that maybe you felt like you missed the boat if that's something you were interested in investing in. So let me see if I can. This is DWX Technologies, and they're a supplier to the nuclear energy industry. And it did a large bump up on their last earnings. It seems to have pulled back as an opportunity to maybe buy more if you're of the mind to. It is very speculative. I wouldn't suggest putting a lot of money in this, but if you felt like you missed the nuclear run up and it's pulling back, it might be an opportunity for you to enter a small position in something like this. But just it is very expensive relative to the market, and but if you are of mind to take advantage of that nuclear power thing. I wanted to just let you all know about WealthGuard Advisors. One of the things we specialize in is actually low risk investing using US Treasury notes, bonds, fixed investments that have very little to no risk relative to the markets, obviously. And we use options a lot of times in commingled with those fixed investments that have low risk to give you that opportunity to grow your assets greater than what a bank would do. If you're interested in knowing more, let us know. We'd love to talk to you. Thank you for listening and have a great day.
Thank you.